Welcome to the Mortgage Rate Weekly Market Update for the week of March 12, 2018. Hello, I'm John Thomas with Primary Residential Mortgage to give you your update. Well, last week, mortgage bonds were stuck trading in a sideways pattern. If you take a look at the mortgage bond chart on the screen, you can see mortgage bonds were trapped between the two blue lines after a big sell-off since January. So we're looking for a breakout for mortgage bonds between those, either higher or lower. Last week on Friday, we failed to break out. Mortgage bonds did move lower after the jobs report came out. So the big thing we're looking at is the U.S. Treasuries ended the day on Friday at 2.9%, just below resistance at 2.908%. If they move above that, Treasuries could move higher. That would be bad news for mortgage bonds. We could see mortgage bonds sell off. So we're hoping Treasuries will stay below the 2.908%. And if they move lower, that could help mortgage bonds break out of that channel higher, which would move mortgage interest rates lower. But the risk is the long-term trend is still for mortgage bonds to sell off, moving interest rates higher. If the stock market continues to rally, that's going to be bad for mortgage bonds. That could make them break out of that channel lower, move interest rates higher. So with that in mind, we're going to be conservative because bonds have been selling off. We're going to recommend locking in your mortgage interest rate. Take advantage of what you got. The upside potential is outweighed way more by the downside. As we break out of this channel lower, we've got a long way to go. We can see rates jump higher, and you'll be disappointed if you didn't lock in. So go ahead, lock your rate, take advantage of what you got right now, and we'll see what happens. Now, in economic news, the big news has been the mortgage rates. A lot of people just don't understand, hey, it moved significantly higher since reaching the low of last year, September. And then as of January this year, they've been just on a steady climb higher. But if we put that in perspective, mortgage rates are moving to 6%. That's just probably where they're going to be the middle of the end of this year as a norm. That is still historically low. If we look at the average over the last 47 years, that's October 1971 to January 2018, the average mortgage rate for that entire period is 8.35%. So that means even at 6%, you're still getting a historically low interest rate. It's still a great time to buy. Home prices are moving up, interest rates are moving up, so now's the time to buy. Take advantage of locking in a good rate and getting the home price appreciation after you buy it, because it looks like home prices are going to keep appreciating this year, even into next year, because we have a very low inventory, which is putting upward price pressure on homes. Now, on Friday, we saw the jobs report for February 2018 come out, and it was a blockbuster. 310,000 jobs were created, well above the 210,000 were expected. They also revised reports for December and January higher by a combined total of 54,000 jobs. So this brings the 3-month average for jobs created to 242,000 jobs per month. That's a great number. That means we have a very strong labor market. Now, U.S. stock markets rallied on Friday from the news. We did put pressure on bonds. That's why I saw mortgage rates move higher on Friday as bonds did sell off. There was some bond-friendly news in the report. Wage growth inflation did ease. The year-over-year figure fell from 2.9% down to 2.6% for wage growth. So that was good news for bonds there. Now, the unemployment rate did remain the same at 4.1%. So overall, very good jobs report, very good labor market going on right now. Now, if we look at the housing news, we saw CoreLogic release their home price index for January 2018, which shows home prices moved up 0.5% from December, and we're up 6.6% from January of 2017 to January 2018. Now, the prediction from CoreLogic for next year, for January to February, is to stay flat at 0%, but year over year, they're looking at 4.8% average price appreciation. So another year of solid price appreciation for homes. So if you own a home, that's great news. If you don't, get out there and buy one, or it's going to cost you more. And then some other good housing news. USDA Rural Housing Loan Program is a great loan program to get 100% financing, no down payment. They've just now opened it up to being able to use that loan program for manufactured homes. So now you can get no down payment, minimum FICO score 620, also allows for newly constructed manufactured housing. So that's a great new opportunity to own affordable housing. Manufactured homes are typically more affordable homes. As long as you're buying it and you own the land, it's on a permanent foundation, you can do the USDA loan, so it's a great opportunity for that. Now, on the local news, the next first-time homebuyer seminar is Saturday, March 24th from 10 a.m. to noon. That is in Newark, Delaware at the Christiana Hilton Hotel. And then we're going to be in Wilmington, Delaware on Wednesday, March 28th from 6 p.m. to 8 p.m. in the Independence Mall at eXp Realty office. And then we'll be in Dover Saturday, April 7th from 10 a.m. to noon at the Garden Hilton, the Garden Hilton Holiday Inn. That is right there on Route 13. You can register for either one of those events. Give us a call in the office, 302-703-0727, or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.